Are you hungry for the latest news and trends from the internet? Welcome to What's Cooking on the Internet, your one-stop shop for discovering the hottest digital delights. Hit that subscribe button and let's get cooking.
Washington's expanding tax net. Are your services now taxable? What do you think? Let us know below. As Washington expands its sales tax to cover more services, are we creating a fair economic playing field or accidentally stifling innovation? It's a big question, especially since the Department of Revenue is already notifying tens of thousands of business owners about major changes to their tax reporting. Here's what you need to know. They're getting the word out. The Department of Revenue is sending letters and digital alerts to businesses about these upcoming shifts. While it's good they're reaching out, it also highlights how complicated modern tax codes have become. For many business owners, figuring out these changes will be a huge administrative headache, pulling resources away from their core operations. The deadline's coming fast. The new rules kick in on October 1st. That's just around the corner, leaving businesses with a short window to fully understand and update their billing and accounting systems. If you're affected, you'll need to act quickly. New law, new definition. These changes stem from Senate Bill 5814, which redefines what a retail sale is to include a much wider range of business services. This redefinition isn't just happening here. It's a national trend as our economy shifts from making goods to providing services. States are looking for new ways to generate revenue. It makes you wonder how we define value and consumption in today's digital, service-driven world. Who's affected? Lots of businesses. The Department of Revenue expects over 90,000 businesses to be hit by this new law. That's a huge number, spanning from tech innovators to traditional service providers, showing just how widespread the impact will be. While the goal might be to broaden the tax base and ensure fairness, it could also mean higher operational costs for businesses, which might get passed on to consumers or make them less competitive. What services are taxable? A lot. The list of services now subject to retail sales tax is extensive. It includes things like information technology services, custom website development, investigation, security and armored car services, temporary staffing, advertising, live presentations, sales of custom software, and even customizing pre-written software. Plus changes to digital automated services exclusions. This covers everything from old school services to modern digital ones. It looks like they're trying to capture revenue from the booming digital economy, which often operates without traditional sales tax burdens, but it also means higher costs for businesses that rely on these services, which could eventually hit your wallet. So, what's the ripple effect? Will businesses just absorb these costs, or will they pass them on to us, making services pricier? Could this change where new businesses set up shop, or how existing ones structure their operations? And what about small and medium businesses? They often don't have dedicated tax teams, so this is a huge administrative burden for them. This expansion of the sales tax base clearly shows how states are updating their revenue strategies for a service-driven economy, moving past just taxing physical goods. As Washington adjusts its tax system, we have to think about the tricky balance between getting enough state revenue and keeping our business environment dynamic and competitive. How do we make sure our tax policies are fair and forward-thinking, actually helping innovation instead of accidentally killing it? These changes should get us all talking more deeply about our state's economic future and how taxes fit into it.